Good afternoon, blockchain experts and enthusiasts. This is Alena Zaleska. I am director at WeTel Blockchain Center, and I'm thrilled to welcome you all to our next episode of WeTel Blockchain Coffee Talk Show. Last week, it was all about Web3. What are the opportunities, potential, the current stage? What is Web3 marketing, recruitment in Web3 space? As well, we tried to predict the future, the financial future, and see how FinTech 2030 will look like. And today is going to be a very exciting topic. We will be focusing on digital assets, because it's not just something that's made blockchain technology famous, but it's our reality as more and more people every day use digital currency. And I'm excited to introduce our today's experts, Elias Ahonen, blockchain author and legal expert, described as one of the first Bitcoin historians, as well as Bilal Ahmed Mir, founder and CEO of Carter Capital. Gentlemen, thank you so much for joining me today. I would like you to introduce yourself to the audience, tell what's your area of expertise. But to make it more interesting, I want to insert the question in your introduction. How did you and when first time explore yourself in the blockchain ecosystem, and what was this first experience? Yes, please, Elias, you can start.
Thank you. It's a pleasure to be here. I have been in the blockchain space since the year early 2013, maybe even late 12. And I was 18 at the time. I was a first-year university student in Canada. And I came across Bitcoin. And I decided that this was a revolutionary concept. I was studying political science, and I noticed that this idea that you can have a currency that can be moved, by the sole authority of an individual that is not within the practical reach of any other authority. I found that from the, scientific, societal science perspective very interesting. So I started buying some Bitcoins. And what I happened across was these physical Bitcoins, which they were these physical coins that had a sticker on one side and it would say 1 Bitcoin on the other. And you could peel the sticker off, and they would be the private key, and that would be 1 Bitcoin. So that was my first book that I wrote in 2016 about the physical Bitcoins and the history of the industry. From there, I started an exchange consulting company. We started cryptocurrencies around the world, and then I took some time off to write another book, which is Blockland, and it came out last year. It's 500 pages, and it tells the history of this whole blockchain movement for the first 10 years, the different ideas, technologies, how they built together. More recently, I've become a legal expert. I have a master's in law, in international law on blockchain metaverse regulation. And I also write for Cointelegraph regularly as a journalist, and I am a director of an exchange.
Thank you, Elias. Very fascinating. Thank you so much. Yes, please, Bilal.
No, that's very interesting, Elias. My entry into crypto was from a slightly different angle to yours. I think yours was very much from the technology side. Mine was from the financial side in 2016. At this time, I was beginning my career in investment banking in London. I was working for an investment bank, and I came across Bitcoin, first asset that usually one comes across in the crypto space, as a financial security. And I was very interested in this financial asset that was being traded on exchanges and global markets that was increasing in value at a phenomenal pace, unlike anything I had seen before. The first couple of times I came across it in 2016, I dismissed it as, a scam or something there that is not very legitimate. Being from a traditional markets perspective, as someone that was dealing with bonds and loans and stocks on a daily basis, I didn't think that this invisible internet protocol could be of any value. When I dug beneath the surface, very quickly I understood that there was phenomenal technology going on here. blockchain technology, which allowed the transactions of this asset to be recorded forever, on a ledger, or on an immutable ledger that can never be changed. As someone that was in European and global banking markets at the time, when money was being printed, quantitative easing was going on, currencies were being debased, and this came shortly after the financial crises of 2008 and 2011 in Europe, I understood how important this was. As I started to invest myself in Bitcoin and then in Ethereum, and started to achieve some decent returns, those around me within my professional and personal environment, they also became interested in what I was doing from a financial perspective. And slowly I began to manage the assets of those around me, and so too was born at that time an asset management structure, which I called Carter Capital, and still operates today. Now out of Dubai, where I now reside, rather than London. We have multiple investment strategies, whereas we started with just one. We have 4, and we have other members of the team, managing directors and chairman of the company that provide managerial support.
Thank you, gentlemen. Thank you so much. I have really experts today. It's such a pleasure. And so let's begin. And as you was mentioning, yes, everyone who exploring the digital assets markets, they have their own story, how they entered. But what we can say that undeniably, the crypto and digital markets are changing the international monetary and financial systems in profound ways. But if we look at current states of crypto asset management, how it looks like today? Bilal, would you like to start?
Crypto asset management industry is in a very interesting point today. It's at an inflection point where we have now seen undeniably and quantifiably the entry of institutional investors into this sector. We're now seeing some of the largest asset managers in the world begin to add crypto as a bona fide asset class within its portfolio and for the portfolio of its clients. Indeed, this year in 2022, the world's single largest asset manager, BlackRock, announced that it would be offering crypto products to its clients for the first time. BlackRock, for reference, manages over $12 trillion of assets globally. Now, the total value of crypto in total is less than 1 trillion today. So you can see, that the traditional markets, traditional asset managers, they manage at a much larger scale than even the entirety of the crypto industry. Nonetheless, they have seen some of the fundamental benefits and advantages this asset class has. They've seen it record phenomenal financial returns in recent years. And there's been a track record of it closely following credit cycles, monetary cycles globally, which myself as an asset manager analyze very closely. And these guys are doing the same and communicating the same to the market and beginning to view it as a serious asset class.
All right.
So looking ahead to the next couple of years, we're going to see big asset managers like the one I mentioned, and there's many more, enter into the space, which is going to cause a lot of changes to this sector.
Absolutely, absolutely. Elias, would you like to add?
Yes, absolutely, and I think that was a wonderful analysis there from industry expert from the banking side. I think that when we talk about institutional investment, this has been a regular discussion topic in the Bitcoin and the cryptocurrency space for as long as I remember. In 2013, there was a wave of institutional investors are coming now. And then in 2015, then in 2017, and now again. And the fact is, yes, there's always institutional investors. The question is in what capacity and how much of a percentage. And I think the really interesting and truly, the tsunami that's coming from out there is that if you do surveys, I know that they've been done in the US. I'm sure that if you were to even do them in China and Europe, if you look at millennials and the younger Generation Z, they don't have a lot of money right now, but 50% or more of them would want to see cryptocurrency in their retirement portfolios. So in the next years, and we're talking decades here, we're going to see this new generation rise up, and for them, cryptocurrency isn't some sort of interesting subject that they haven't heard about and they're trying to figure out. But at that point, it's just one of the financial instruments that are out there, and if they want even 5%, 10% of their accounts in them, that's a big deal. If we look at the traditional markets, if the traditional stock market, coughs one day, like
Yeah.
it drops or it goes up as much as the entire cryptocurrency market cap. So it feels like we're still, playing at the small stakes here.
That happened this week. There
Yes.
was a global reduction in equity market value, just equities, which are stocks, a reduction in value of a few percent, larger than the entire crypto market. So that goes to show, we're very, very early in the stages of adoption and growth, and how much larger and more entrenched and developed these other markets are.
Absolutely. I think the main problem is that the market is volatile. So for individual investors, they are just trying and exploring, going online and trying to see how it works. Maybe they watch some videos, ask some experts for the advice. But of course, when you mention the institutional investors, they're the one who are looking for the investments which are stable, which are predictable. So what their current view on the asset markets nowadays for the institutional investors, and how they can reflect the individual investors as well?
I mean, I was speaking to an institutional investor today, and I was making the case that right now represents a phenomenal entry possibility into crypto markets.
Okay.
We're at a very depressed valuation in light of the last 2 years. We have established that certain protocols like Bitcoin and Ethereum are working and have successfully integrated operational upgrades, and it just works. And the thought process that you were having last year when Bitcoin was 50K, 60K, you should be having that in overdrive now that we're around 20K. But the response that I got is exactly as you correctly mentioned, volatility.
Yeah.
Someone who is an institutional asset manager, is managing huge portfolios, would not wish to risk their, quite frankly, job and career on investing in such a volatile asset class when there are other opportunities out there, which are somewhat depressed in valuation as well, that offer a lower risk entry point right now. But these institutions, including Carter, including others in the space, have been setting up to deploy capital in the next 6 to 12 months when the global monetary cycle changes. The larger institutional investors have been working with entities like Carter, like custodians, like Fireblocks, crypto KYC companies like Chainalysis, a company that you know very well, no doubt, to set themselves up ready to deploy capital. So this wave will come. And when it comes, because institutional capital is there, we're going to see crypto valuations increase phenomenally fast.
All right. Interesting. Yes. Elias, anything?
Yeah, I mean, I think maybe a slightly different look to institutional investors.
That's good. I want to see the difference.
Of course. I mean, just in the sense that we think of institutional investors as some sort of, big whales or, container ships that no one can control, that have the minds of their own, but really they work for the average people. The institutional investors are the servants of the, the taxi drivers, retirement fund, and all these kinds of groups.
Yeah, who wants to remove the headache from him, and that's why he wants to ask the expert, do it for me.
Indeed.
Yes.
And back to the volatility part, I mean, we have to understand we look at the maturity of these markets, and I mean, I remember if we look at the cycle of this cryptocurrency movement, there's always people that say, oh, it's going to go to zero. If it goes to 100 and it goes to 20, oh, it's going to zero. When it goes to 10,000 and it goes to 300,000, oh, it's going to zero. And that's the fear, that's the innate fear that people have that are scared. They think that what if it has no value whatsoever? So people are bullish at 60, 70,000 Bitcoin, and then at 20, we say, these people said then, is, oh, there's volatility, we're scared.
Yes.
But the reality is that we have, and I'm speaking of my opinion here, not financial advice, that these millennials, these younger generations worldwide are interested in this. It's very difficult to say that this is going to zero, especially again now that Ethereum has had the upgrade that has removed the environmental burden, 99.9%, as far as mining goes. That means that Ethereum is no longer being mined in an environmentally destructive way.
Yes.
And the other one, just about the maturity of the markets. I mean, how old is the gold market? Thousands of years. It's very mature. How old is the real estate market? Hundreds of years. The stock market, I mean, 100 200 years. The crypto market is 10 years. I mean, you expect some volatility, but it doesn't mean that it's almost unreasonable to put the expectations on it when you're comparing it to real estate or equities. It's a different market.
Of course. One thing I like to remind people is that volatility can also be to the upside, in which case volatility is your friend. And if we look at the long-term price history of assets like Bitcoin and Ethereum, which direction is it going?
I believe it's going up.
I believe so as well. So the volatility can be your friend. Institutional investors share, remarkable similarities sometimes with retail investors. They don't want to buy the bottom. They like to enter when things are going up. They have, investment committees to satisfy, risk parameters to overcome. That's normal. It's something that I understand. But, based on my personal conversations that I'm having, this time around, this cycles which, Elias and myself have experienced before, they're going to be involved this time.
All right, very interesting. Thank you for that. So, Elias, you were mentioning the value of the cryptos. Of course, like if we look, the market is very new, but still in circulation, it's around 20,000 cryptocurrencies. Let's remove the dead ones, still will be 10, 11,000. It's quite a lot. So if we look at the markets of the crypto assets nowadays, how it looks now, and is it quite adventurous to deploy the capital in the asset class right now? And why yes, why not? From the point of the interest rates, from the inflation and geopolitics, from that point, let's discuss.
I think that's a very long question, but what I can say, I remember the days when there were maybe 30 or 40 cryptocurrencies, and back in those days, people were saying, "Oh, there's too many. We only need one or two." And
no thousands.
Yes, thousands and thousands. But the reality is that, as is with anything, most of these don't have any value whatsoever, and by that I mean that they're going to zero. This isn't a regulated market. Anyone can, a grade 5 student, they can do a school project and they can make a cryptocurrency. It's not rocket science. The question is, does it have value? And from this legal perspective, as a legal professional, we look at securities, equities, things like this, and it's the same thing fundamentally. You can have all these stocks in theory, but what's it backed by? What's it doing? What is the investment based on? And I think what we're going to see is that the majority of them, a lot of them are scams, unfortunately. A lot of them are hype projects. And from my personal, consulting experience, unfortunately, I can say that a lot of projects in those hype phases, they have huge dreams, and they want to raise this many hundreds of millions, but really they don't necessarily measure up to what that should be, and it doesn't come up. Does that answer part of the question?
Yes, absolutely. Thank you so much. Yes, Bilal.
Yeah, from my perspective, managing Carta Capital, we choose to only focus on 15 to 20 high quality blue chip liquid coins and tokens at any given time. And these will include, some of the household name assets we've mentioned already. It's simply not possible to have, a strong knowledge of 20,000 assets. So we choose to focus on these. These have served us very well and will continue to do so. We're very confident for the next 12 months.
So you don't give the chance for this new coming?
No. Of course, we give a chance, and we're very open to reviewing new technologies, as long as the technology is quantifiable, has a use case, people are using it, and it's realistic. Is Carta Capital going to invest in the latest cat or dog coin? No. Is it going to invest in a new technology that provides substantial benefits to, for example, transaction processing speed? Yes, we are. That's how we view things.
I would like to add that when we talk about this idea of 20 or 30,000 digital currencies out there, it can be misleading because there's a very vast difference in the size and volume of these. If we look at just Bitcoin, maybe you know better, what's the current Bitcoin dominance ratio?
It's around 45%.
So 45% of the entire cryptocurrency market cap is just Bitcoin. Ethereum is another several, maybe 30, close to 30, 25%. So with Bitcoin and Ethereum alone, that's the vast majority. Then we add another top 5 if we had the top 10 cryptocurrencies, I would confidently say that's 90% of the market.
Yeah, there's around
So we
something like
don't need too many cryptocurrencies, you mean? And they will be dead within the time?
Well,
What's your projection?
I'll say it's yes and no. Yes, most of the ones that exist currently will be dead. But in theory, we can have a lot of cryptocurrencies in the future just because we have a lot of assets and investments today. I mean, maybe in 20 years, instead of buying a house, instead of buying an apartment, you buy, there's an apartment building, a tower, and it's tokenized. And once you buy 100 tokens, that means you can redeem it for a 100 square foot apartment. Or 1,000 tokens for a 1,000 square foot apartment. Maybe the towers will be tokenized, just like they technically are now from the legal perspective. It's just not on a digital token, it's on a paper ledger, it's with the government. So in theory, maybe we'll have 10 million tokens 20 years from now, but maybe they'll be backed differently, maybe they'll have a real legal basis versus right now where it's more of a Wild West, and if you venture out of the top 50, top 200, it's really a jungle, I should say.
Yeah.
And I just want to comment on a word you've said a few times, which is backed. You say, backed by this, backed, something that I hear a lot and something that maybe you've heard is, Bitcoin is not backed by anything, crypto is not backed by anything. If I can ask a legal expert, the 63 billion pounds that the Bank of England created into existence last month, what was that backed by?
Well, that's a very good question. And
or the 13 trillion that was printed by the US Federal Reserve in response to COVID, what was that backed by?
Well, we would say that it's backed by the full trust and faith of the US government.
Okay.
For whatever,
right,
however backing you put that. But
Yes.
if you're coming from the traditional world, and by the traditional world, I mean the world of existing finance, you play within that game, you play within those rules. And when you say backed, you talk about dollars or euros, and you don't really think about, okay, where do those come from? Because the places and the sources that those currencies come from, they're the very underpinnings of our society.
Yeah, and I'll bring up another incident in 2011 in Cyprus. You'll remember this. There was a bank bail-in. They called it a bail-in, where actually depositors in Cypriot banks that had more than 100,000 euros in their accounts, half of that was taken from them to recapitalize the banks. Now, that was a Eurozone, EU country, where this happened. So such events have happened in recent history in what we would call developed economies. They certainly happen in emerging markets as well. So this can happen again. There's absolutely no reason why it cannot. So I would make that point about backing. What is backing fiat currency?
So I think this is a very good point. I remember if this was 2014 or was it late 2013, the Cyprus crisis, this was a huge boom for Bitcoin. The message of Bitcoin in that moment really got out there. Someone made a song about Cyprus and Bitcoin and how Bitcoin is going to save the people of Cyprus. Not that that necessarily happened or anything like that, but that was the idea. And when we talk about backing, I think that's fundamentally one of the, I don't know if the realities, but the ideas behind Bitcoin is that historically gold backed government fiat currency, right? And historically we've seen gold as this, after we lost the gold peg, people have still been buying gold bars, gold jewelry, with the idea inherently, generationally, that if the currency fails, at least we have gold.
Exactly.
And
yes.
Bitcoin has the same, I want to say, ambition. Even if the currency fails, at least you have this non-state backed peg that is a value that we can exchange. Now, maybe will that compete with gold? We'll see, but that is the ambition of it.
Yes.
Very interesting. Thank you so much. But it was mentioned a few times about the trust. We know a lot of scammers are happening. So how to bridge, in your opinion, the gap between the speculation which is happening with the crypto assets and the fundamental value of it? And first, before answering this question, what's what's first the fundamental value of the crypto assets? Like, for me, it's the potential of the blockchain technology itself. It's the way how it can decentralize the decision making. It's the opportunities for our daily life and the business in the business operations as well. So how, in your opinion, what's the fundamental value and how we can bridge that gap?
Yeah, for me, breaking down, different crypto assets into different categories is helpful. Bitcoin serves a different purpose and solves for a different problem than Ethereum. Bitcoin I view as a store of value. I believe that it has fundamental advantages over gold in a number of ways, and I can certainly go into those. The total market cap of gold is around 12 trillion today,
Right.
whereas Bitcoin is less than 1 trillion. So I view that, on a at least equal basis, that's at least 12x increase from where we are now to where gold is. And I certainly believe Bitcoin can go higher than that. Ethereum being the base level of technology that all of these applications such as DeFi, NFTs are built upon, that has tremendous value, and actually something which is very difficult to quantify. If I compare what is going on today to what happened in the dot-com era, at that time, if one wanted to invest in a dot-com company, you would have to be a very, very skilled and strategic stock picker to pick an asset like Amazon. You would then have to have nerves of steel to hold that asset when it suffered multiple contractions of 80% plus. Had you had done that, you would have made a very good investment. Today, we don't have to make such a strategic asset allocation decision. You can just own the underlying base layer of these technologies. You can own Bitcoin, Ethereum, a tail of other layer 1 blockchains, of which there are many, with different qualities, and benefit from the technological advancement that is happening all around the world. If you believe that technology is inevitable, if you believe that human innovation and progress is inevitable, then why would you not want to align yourself with the greatest technological advancements going on today, which is blockchain?
Yeah, so I guess the trust and knowledge, that's the two main parts. Yeah. Yes, Elias.
The way I see this is, and you were really touching upon this, I mean, what is our world now underpinned by in the digital age, in the internet age? I mean, www. Imagine if instead of investing in having to pick Microsoft or Google or pets.com, which was a horrific disaster in the early 2000s, what if you could invest in www? What if you could invest in the concept of the internet? What if you could invest in the concept of email? You're not picking Yahoo Mail, you're not picking Google Mail or anything like this. You're just investing in the base layer that upon which email functions. And then if 50 years from now, 100 years from now, email is still functioning, you're earning something from each email that is being passed. I mean, that would be the biggest investment, I mean, that wasn't possible then.
Yeah, we'd all like to have taken that investment. And the opportunity exists now to make such investments. So this narrative is, we've believed in this and percolated this for a number of years. This is slowly starting to be better understood and links back to the earlier point about institutions, starting to enter into this space.
Absolutely. Yes, and overall, the idea of the centralized finance is to remove the intermediaries so we can directly lend, invest, and access the capital markets. But of course, with any emerging technology, and especially in the financial space, there are the risks, there is less lack of trust. That's why we can say that decentralized finance is at the same time opportunity and a challenge. The good part of it is that software, they don't take the bank holidays, we don't pay extra for the management layers. But on the other side, there can be some bugs, cyber risks. Of course, the DeFi protocols are evolving and becoming more sophisticated, but still it's quite a way to do that. So the question is how DeFi can defy elites to empower all. Elias, would you like to start?
Sure, I'll start with that. So DeFi, for those that aren't familiar, is called decentralized finance. And in the crypto space, there's different voices, there's different, you could say, political leanings. Some people believe that cryptocurrency has a certain purpose and of being decentralized and taking away the authority of governments to run money. And then there are other voices who say that actually no, cryptocurrency and digital assets can consolidate the ability of governments and institutions to control money, to control transactions. So within the crypto space, there are centralized exchanges. You have the Binances of the world, other cryptocurrency exchanges that have an office, that have one guy who is the CEO, which operate under the laws of some country, and they can freeze your accounts if the authorities of whichever.
Yeah.
So that's centralized finance within the crypto space. And then decentralized finance is something that functions on smart contracts. So I can have, a certain token and you can have a certain token, and we can exchange without us ever meeting, without us knowing who we exchanged with, and without any other person knowing or controlling that. It's like a vending machine where, if you put in a coin and I put in a coin on the other side, they just get exchanged. And it's
a
like
very good example, yes.
So that is a huge challenge. And I could say the word threat, I could say the word opportunity, but I'll be balanced and I'll say challenge, because it changes the fundamental way in which people can transact. And that is, within some people's interests. And for some entities, it's a huge risk because it threatens their position.
And it opens many doors to financial inclusion. There are, huge swathes of the population, particularly in developing countries, that don't have access to financial services like savings or credit or insurance.
Correct.
And this has real-world detrimental effects on their life and potential economic growth of the country as a whole. With DeFi, financial inclusion can really be, attained by such people. I'll give you an example. You could have two people approach a decentralized finance protocol. One of them could be a hedge fund manager on Wall Street. The other could be a 15-year-old Ethiopian schoolgirl with a mobile phone.
Correct.
And they would be treated exactly the same, offered the same financial products at the same price without discrimination. Now, as we continue in the world we live in to see smartphone proliferation, mobile data connection, growth of the internet, all of these things can be attained through DeFi. So I view DeFi as the most important function of crypto and blockchain for the development of humanity.
Which has a lot of opportunity, undoubtedly, absolutely.
Of course, and that's at an individual level. Let's move to a more institutional level where there are large problems of money transfer and capital transfer. For example, one could have the unfortunate reality of residing in a country under sanctions through no fault of their own. Now, if you try to engage with a banking channel to send or receive capital overseas, you're going to receive a no as the answer. But through DeFi platforms, this can be done. And again, that opens the door for significant development and growth of people that are living under difficult financial conditions.
Absolutely. Thank you.
And
Yep.
this of course, you mentioned the individual living in a country under sanctions. But again, if we look at this from the perspective of international law and of countries and that are putting down sanctions, this means that sanctions can be evaded, and this means not just the little girl in the sanctioned country, but it means the person who is being sanctioned can also accept money and send money, and this is a huge, again, challenge to the powers that be to the whole system as it exists.
Yeah, I mean that is a challenge, and that is a reality. It's not something that I'm particularly concerned by, as someone that was a practicing professional in traditional markets, in traditional banking. I am aware of some of the things that go on in traditional banking markets. All one has to do is Google some of the fines that these banks have received and some of the antics they've gotten up to down the years to know that this sort of thing is going to happen anyway. Ultimately, the objective of DeFi and crypto as a whole is to create an open financial system for people to participate as they wish. Now, in the world, there's going to be good actors and bad actors.
Absolutely.
We're never going to be able to eliminate that from human nature. We can try, and there are means and methodologies to attempt to control this.
Yeah, but it will be still there.
It's
Yes.
always going to be there.
Yeah, absolutely.
Do we, paint the entirety of crypto and DeFi with the same brush, saying this is used for illicit activities? No, of course not. That doesn't make sense.
That's right.
The main beauty of blockchain technology that it combines and bringing together all worlds, all industries, no matter what you do, work in the retail, in the medical institute, or like doing anything art, it's connected via the blockchain technology. And of course, every day we're receiving the news, how the innovations are moving. And that's why we are here with the WeTel Blockchain Coffee Talk Show. And we will see you next Friday.